Hey there friends and fellow moneymakers. Today I've got something super special for you. We're diving into a world that might seem a bit intimidating at first, the stock market in 2024. Now, I know what you're thinking. The stock market? That sounds scary and complicated. But guess what? It's actually filled with hidden treasures, and I'm here to help you find them. We're living in a year that's a bit like a roller coaster, right? Money worries, talks of a tough economy, and a stock market that seems to be dancing to its own crazy rhythm. But here's a secret. When the stock market feels like a wild ride, it's actually the perfect time to discover some amazing opportunities, especially in dividends. So, are you ready to embark on an adventure with me? We're going to explore 6 outstanding dividend stocks that are not just good for today but are shining stars for the future too. From the safe and steady to the bold and daring, we've got a mix that's sure to add some spice to your investments. And remember, while investing can be a bit risky, it's also a thrilling journey. So do your homework before you choose. Buckle up because I'm about to take you through a stock market safari that promises to be as exciting as it is informative. Trust me, you won't want to miss a second of this. Before we jump in, if you love these adventures and want to support me, smash that subscribe button and give a like. Ready to see what the stock market has in store for us? Let's get started and uncover the hidden gems of 2024's stock market together. Here we go. We'll start with the 2 safer stocks. First is PepsiCo, with the ticker symbol PEP. I talk a lot about PepsiCo because they're really strong in snacks and drinks. They haven't just survived hard times but done really well. They've increased their dividend every year for over 50 years, making them a dividend king. PepsiCo isn't just good for dividends because of its past. Right now, its dividend yield is super attractive, over 3%. I think it's a great time to buy their shares. This stock doesn't usually lose value, so it is safer. But now, it's about 16% cheaper than usual, making it a good deal. It's still a bit more expensive than others in the same area, but that's normal for PepsiCo because they're so big. It's good to compare PepsiCo with Coca-Cola, which is really big in the US soft drink market. Warren Buffett, a famous investor, loves Coca-Cola, but I think PepsiCo is better. Why? They're not just about drinks. Half of their sales are from drinks like Pepsi and Gatorade, and the other half from snacks like Fritos and Doritos. This mix helps them sell way more than Coca-Cola and keep breaking records in sales and profit almost every year. Even though I don't think most PepsiCo food and drinks are super healthy, they're big enough to start selling healthier stuff or buy smaller healthy brands. They've already done this with things like bubbly sparkling water, SodaStream, Health Warrior protein stuff, and high-low keto chips. There are a lot more examples like this. Another safe choice I'm super excited about is the big company in medical devices, Medtronic, with the symbol MDT. They lost about half their value because healthcare had a rough time. Fewer people got optional medical stuff done, and lots of hospitals even went broke during the worst of the pandemic. But here's the cool part, Medtronic sales have more than doubled over time. Yes, they dipped in 2020 and 2023 for big reasons, but they're making a comeback. Sales are expected to grow in the next years. Just last quarter, they grew a lot in all their areas. Even more than other medical device companies, and they're the biggest in the world. Medtronic is also getting into super exciting stuff like robot surgeries and artificial intelligence, AI, the future of healthcare. AI is growing really fast in healthcare with a huge 37% annual growth. Medtronic is jumping into this by adding AI to their devices and services. Let's talk more about Medtronic's cool AI stuff. They have this spine surgery tool that predicts how surgeries will go, and it's the only one the FDA says is okay to use. They also made an AI system that finds polyps, which help treat cancer faster. This system was even called a world-changing product by Fortune. Plus, they're working with NVIDIA to make a platform where people can test AI models in medicine. This is big. I think investors aren't paying enough attention to these amazing things. Because of this, Medtronic stock is more than 20% cheaper than others in the same area and 30% cheaper than its usual price over the last 5 years. And the dividend yield is nearly 4% with almost 50 years of growth. So, PepsiCo is already a top dividend stock and Medtronic is on its way to being one too. Both are great, safer choices for long-term dividends. The next one I'm excited about is the biotech big player, Bristol Myers Squibb. with the symbol BMY. Bristol Myers might not be as well known as Pfizer or Moderna, especially with all the pandemic news, but they're a good pick. They don't depend too much on the COVID-19 vaccine, which isn't in high demand now, but they face their own challenges, like some of their medicines losing their special patents. They're making new drugs to cover this, but it might take a year for these to start making money. Bristol Myers Squibb stock dropped a lot, losing almost 40% of its value, but I see this as a great time to buy if you haven't already. Here's why. Bristol Myers often grows by buying other companies. Last year, they bought Turning Point Therapeutics for over $4 billion and Mirati Therapeutics for nearly $6 billion. These buys are going to strengthen their future drug lineup, with over 45 new treatments in the works. Many are almost ready, especially in cancer treatment. Sales are down now, but I'm expecting them to pick up. Plus, the stock is really cheap now, more than 50% cheaper than others like it, and their dividend yield is over 4.5%, going up every year for 10 years, with a really low payout ratio under 30%. This makes Bristol Myers a mix of good value and manageable risk, a solid dividend stock to consider. Next is Pfizer. They've been super focused on the COVID-19 vaccine, but now less people need it. This made their stock fall by more than half. They think they'll vaccinate less than a quarter of the US population this year, but is this big drop in their stock fair? I don't think so. Putting aside any personal opinions about Pfizer or controversies, just as an investment, the stock looks really good now. Let's look closer at Pfizer. Even if only 24% of the US gets their vaccine, that's about 82 million people. Sales dropped a lot after the pandemic, but they're still expected to be 50% higher next year than before the pandemic. Yet Pfizer's stock price has dropped a lot, which is surprising. Pfizer made a lot of money during the pandemic, and they're using it to buy other companies to keep growing. This will help balance the drop in vaccine sales. They've bought several companies like Riveral for over $500 million, Trillium for over $2 billion, and more. The latest big buy was Seegene for over $40 billion. This deal gets them some promising cancer treatments, adding to their big list of over 100 drugs and treatments. This will keep them strong in the drug market. Despite all this, Pfizer's stock is really low priced, half the average of others in the same field. And their dividend yield is the highest it's been in over 10 years, more than 5.5%, growing steadily for more than a decade. So buying Pfizer stock now could be a smart choice for the long term. Alright, next, it's the big bank, US Bank, with the symbol USB. Its value's dropped by almost half and is now super low, even lower than during the pandemic, which was technically a recession. This is strange to me because the price is really low and it offers a big dividend. Right now, it's about 10% cheaper than other banks and 40% cheaper than its own average price over the last 5 years. The dividend yield is over 5.6%, which is one of the highest ever for US Bank, and they've been growing this dividend for more than 10 years. I understand why people might be worried about bank stocks, but US Bank is the 5th biggest in America. It's not going to fail easily. Even with tough economic times, they did better than expected last quarter. They grew their loans by more than 10% and didn't spend more. They're also doing well in other areas, not just interest income, which is rare these days. And compared to the other big 5 banks, US Bank really stands out. They have a great return on assets and the second best return on equity, just behind JP Morgan Chase. Plus, their dividend is the highest. I know there are risks if a recession happens, but I think the stock is already at a really good price. Next to consider is Verizon, with the symbol VZ. I know many people aren't fans of this stock. It's been doing poorly and it's at its lowest in over a decade. But like with other stocks on this list, I see an opportunity here. Verizon is known for their great service, winning almost 200 JD Power Awards in the last 20 years, way more than any other competitor. Verizon has spent a lot to build one of the biggest 5G and fiber internet networks, but these big investments have affected their profits and increased their debt. The telecom market as a whole isn't doing great. Verizon's earnings per share, EPS, has been about the same for the past 5 years and is expected to stay flat soon. But I think Verizon is a strong choice, especially compared to its rivals. Last quarter, Verizon managed to cut their spending by over $1 billion, which helped increase their free cash flow by more than $2 billion. This is great for their huge dividend, making it more secure and lasting. The dividend is my favorite thing about this stock. It's now around 7.5%, the highest I've ever seen, and it's been growing for about 20 years. When you compare Verizon to AT&T and T-Mobile, it makes more sales and more profit from free cash flow. Yet the stock is over 50% cheaper than others like it, even though they're the biggest and best in both size and service quality. There are reasons to be cautious with Verizon stock. They have a lot of debt, not much growth, and there's even talk about Amazon possibly becoming a competitor. But overall, looking at everything, I think Verizon stock is a great deal right now, especially for its dividend. So I'm planning to buy it at these prices. I'm curious about what you think. I'd love to hear your suggestions, so drop your thoughts below. If you find this video helpful, please subscribe for more updates. And here's to your investing success. Profitable investing.